Hello and welcome. You're watching Business Plus. We're bringing you stories from the world of business, policy and economy. First up, here are the headlines we're tracking at this hour. US inflation comes in hotter than expected in the month of January at 3.1%, sparking a sell-off on Wall Street and raising doubts on the possibility of a rate cut this year. And back home, Mahindra & Mahindra is expected to see a 45% rise in net profit in third quarter. M&M shares have risen 11% in October to December quarter. Prime Minister Modi is set to inaugurate UAE's first Hindu temple in Abu Dhabi today. Following the conclusion of his two-day visit, PM Modi will be heading to Qatar. And electric cars are now going to get cheaper, on par with petrol and diesel, as Tata and MG Motors cut prices. No signs of relief for Paytm just as yet. Paytm gets a knock on the door from Enforcement Directorate, ED to probe suspected breach by Paytm Payments Bank. And day 2 of farmers' protest continues. Farmers are agitating in the national capital. Traffic advisory issued. Massive traffic jams clog roads. Those stories we're tracking here on News9. With me is my colleague Suyash Maheshwari. Let's quickly begin with a mood check on what has happened in international markets over the night. Amit Ranjan also joining us here in the studio. Amit, US inflation has come in hotter than expected in the month of January at 3.1%, raising possibilities that higher for longer narrative will continue.
You use the right word, sell-off. It is red everywhere. The Dow Jones closed in the negative at 1.35%. S&P 500 closed in the negative at 1.37%. Nasdaq closed in the negative at 1.8%. Stocks 600, even the European markets, were in the negative at 0.95%. Hang Seng, however, even though they are going, they just through their lunar Chinese New Year, they were in the positive at 0.15%.
Right.
Nikkei again is in the negative.
All right, a massive sell-off, Suyash, and also obviously expected because the month of January was supposed to be a cooler month. We were expecting a soft landing. That is not happening.
I mean, we were seeing inflation ease off so nicely in the US, right? And, you know, if the US Fed in its last policy meeting had not thrown cold water on the possibility of a potential, rate cut in the March, I think the inflation data certainly has. And that's a big negative for the markets. And, it's one of the reasons why we are seeing a correction in the global markets as well, because the markets were rallying on the back of course, a tech-driven rally, but also the expectations that inflation, rate cuts in the US will come sooner, by at least March or June of this year. But I think the inflation data, which is slightly hotter than what the estimates were, has thrown water on an potential rate cut. And we are seeing a spike in the dollar index as well as your 10-year bond yields. The 10-year treasury yields in the US, they have risen to about a 2.5-month high. The dollar index is at a 3-month high, and strength in dollar is bad for emerging markets and for India. And it's sort of a double whammy for us if you look at it, because the Q3 earnings have been nothing to write home about, and we have seen a sharp cut in a lot of stock prices because of the disappointing earnings, and now global markets are also adding to that concerns. But Shweta, apart from that sentimental sort of pullback, we may not see any long-lasting impact from this inflation data, because inflation in India is easing. It's at a 3-month low. So RBI will perhaps look at cues as to our
domestic
local
cues
data, right? And food inflation, which Governor Shaktikanta Das has also pointed out, remains a problem for our markets. That is also easing, well. It came off by about 1% or so on a month-on-month basis. So I think the focus, once this sentimental sort of pullback is done with, the focus will once again shift to our own local markets and the cues coming from the domestic markets.
In fact, On that question, obviously there are two thoughts out there on the street. One is, of course, there may be rate cuts. US Feds may just cut rates towards the end of the year. So it may have prolonged the higher for longer narrative, but the rate cuts will eventually happen. A lot of people are still very optimistic about it. But back home in India, we're not really mirroring the inflation that US is witnessing at this point. Inflation is cooling off in India. It's quite in line with the expectation, not just for the quarter, but also for the entire financial year. So, RBI may not just mirror its US counterpart, and we could see some rate cuts happening in India before it actually happens in the US.
I mean, it's rare for our central bank to diverge from the policy of global central banks, especially from the US. But I mean, if someone is to do it, I think it's Governor Shaktikanta Das and his team, because they have taken decisions in the past which have shown divergence in ideologies from the US Federal Reserve. So if inflation continues to cool off, nicely in India, I think they could go for a rate cut.
Absolutely. And the massive sell-off that we've witnessed in the US markets is also now being reflected by Asian markets. I'm seeing Nifty is down 0.6% this morning.
Yes, Shweta, and we have broken, below the crucial support of about 21,600, and it's a multi-session low for us. But we are seeing a good bit of a recovery from there on. But if I think I'll be more concerned about the broader markets. Remember, yesterday we were talking about how global markets pretty much on every month, there would be one day where they'd see a 3 to 4% shakeout, but then the recovery would be equally swift. This is not happening this time around.
We're not seeing that sort of recovery this
but
time.
the both indices are making lower lows for the past 4-5 sessions, which is a bearish signal, and the valuation concern is obviously there. The valuations are looking stretched. They are at a decadal high compared to your large caps. So that is a concern for our markets, but I'm also looking at the sectors, and it's a sea of red out there. The worst hit, of course, is the IT pack. Nifty IT is down over 1%, 1.8%, and it's falling continuously, as you can see. As of 10 a.m. it was down about 1.9%, and that is of course because of the fact that a lot of these IT stocks were rallying on the back of because the Fed policy did essentially put cold water to expect of a rate cut in March, but they did not talk about any additional rate hikes from here on. So that's why IT stocks were doing fairly well, because of course we have a significant exposure to US markets, and a monetary easing, or at least a higher for longer narrative, bodes well for the IT budgets of these clients. So perhaps their discretionary spending will pick up, and since we are significantly exposed to the US companies and the European companies, IT stocks were rallying because discretionary spending would of course mean a bump up in earnings and revenue for them.
But does the January inflation data from the US would likely pour cold waters on those expectations?
I mean, again, it's all sentimental, because we were not really seeing any order flows getting picked up.
But was this expected?
Yeah, the rate cuts were expected, by...
Was the inflation at 3.1% expected?
No, it's hotter than expected.
Absolutely.
I think the expectation was to, for inflation to come in the month of January somewhere around the 2.9% mark. I think what's more concerning is the fact that core inflation is also ahead of what the street was expecting, and that is also seeing a month-on-month rise. So we'll obviously closely track that, and, another segment of the market that's showing significant weakness is of course the banking pack. And we are below the crucial supports of about 45,000 on the index, and yesterday the banking index was the one that provided strength to the markets, and it was the one that took the markets higher above 700 levels, but we have pretty much wiped off all that we clawed back yesterday. And the banking pack and IT, remember, they have a 50% weightage on Nifty. So weakness in IT and bank means weakness for headliners altogether.
Absolutely. And IT and banking pack taking a beating this morning. IT pack down by almost 1.9%. We are of course going to bring in all those details towards the end of the day also. But a big story that we will be tracking and could be moving markets is how Auto Pack is reacting. Auto Pack, I think one of the only perhaps outliers there. Auto and Media up in the green, Auto at 0.19%. But back home again in Mahindra & Mahindra is expected to see see its a jump perhaps in its net profit, a 45% jump in its net profit. Let me quickly get in Amit Ranjan back into this conversation. Amit, what are the expectations from Q3 results of M&M?
M&M has seen robust growth in the auto sector, and therefore the expectation is almost as much as 44.7% increase in net profit, 17% increase in revenues. EBITDA is likely to go up 14%, slight drop in EBITDA margins, almost 40 basis points. It'll be down at 12.6% from 13% the same quarter last year. But basically, robust growth in the auto sector has what is reflected in what is expected from Mahindra & Mahindra Q3 results.
All right, that is of course as far as Mahindra & Mahindra Q3 results is concerned. Quite a lovely, wonderful perhaps quarter expected from Mahindra & Mahindra. Profits up about 45%, and that could move the markets.
Definitely, Shweta, but I think as far as Mahindra & Mahindra goes, I will personally keep a track on how the tractor sales are panning out, because that has been a segment
that has...
high
frequency indicator, of course,
yes,
of the economy as well.
Of course, and we have spoken about it multiple times on the show, how rural demand, that has been a major laggard. Urban demand is being, urban demand has picked up on a month-on-month basis, and we are seeing that reflect in the numbers of passenger vehicle sales, but tractor demand has been a problem. That has been a problem for the FMCG pack and the auto pack as well. And since Mahindra & Mahindra has a significant exposure, or a bulk of their revenues come from that segment of the market, we'll keep a close eye on that. But talking about the stock of Mahindra & Mahindra this morning, it's trading marginally higher. Nifty Auto is down about 0.5% or so. Mahindra & Mahindra is up about 0.5%, but it has been a relative laggard compared to your other passenger vehicle stocks, because when I'm looking, comparing it versus Maruti Suzuki and Tata Motors has given, of course, phenomenal returns on a one-year basis. It has turned a multi-bagger, and on a 6-month basis, it's up about 50%. Suzuki has done fairly well as well, 20% or so returns in the past 1 year, 14-15% in the past 6 months. Mahindra is seeing some bit of a weakness in the last 6 months, and that is, of course, after their Q2 earnings disappointed the street, and again, there the tractor sales were the big disappointment for the markets, and from there on we have seen some bit of a pressure on Mahindra & Mahindra stock. It's up about 6% on a 6-month basis, largely outperforming Nifty and Nifty Auto, which have given returns of about 12 to 15%, and in the past 1 month also, Shweta, it's up about 0.7% or so.
All right, so returns quite in line with Nifty, but giving up some of those gains as of today. But coming back to what could be perhaps the sectors that markets will be vying on or banking on in order to perhaps come off from its lows as of this morning. What are the domestic cues, Suyash, that we will be tracking?
I mean, of course, the focus is on the earnings season. We are drawing curtains on it. A bunch of companies from the mid-cap and the small-cap segment are going to come out with their Q3 earnings, and along with Mahindra & Mahindra. And, I think the focus, pretty much earnings, at least if you look at the print that comes out, the numbers that come out, they are a non-event for the market, because the market is forward-looking.
Absolutely.
They are banking on what the analysts, what the commentary coming in from the management is, right? But this time, a big disappointment in some of your momentum-driven sectors like your railways and PSUs are disappointing in their earnings. That has, really weighed on the markets. And as we know, stock market returns are a function of your earnings growth as well as the potential of your earnings growth. And the market has been given too much weightage to how much potential they have rather than how much their earnings are.
Absolutely. And PSU story, I mean, that's been quite a surprise for a lot of people out there. And taking a massive dent on retail investors in the past 1 month. What is the expectation? You speak to a lot of analysts every day. What is the expectation as far as, PSUs is concerned? Are we looking at a rebound anytime soon, or are the valuations not quite in line or favorable to what the current numbers are?
See, certainly the valuations are not quite in line with what the fundamentals reflect. But, talking to a lot of these analysts, they are of the opinion, I mean, after you see a 40 to 400% sort of a run-up in stock price in a matter of a year, a 5 to 10 or 15% correction is nothing but a blip, right?
It's a blip, absolutely.
But I mean, and what it does is it shakes off the weak hands, the retail investors who got in at the top. So the smart money stays on, the valuations are, getting rather cheaper, and it allows entry points for certain investors who missed out on that initial rally to get back and make positions in those stocks. But with that said, they are, trading slightly higher than their, not slightly higher, in fact, substantially higher from their historical averages. Valuation concern is there, and if there is going to be weakness in the markets, it will be the stocks which have seen, momentum-driven rally in them. That those could be the sectors and the themes that could, see first leg of profit booking take place.
All right, but as far as the PSU is concerned, government alone has lost about 3.8 lakh crore rupees in the past 3 days. So a massive dent for retail investors as well as government on PSU stocks. We will of course keep a close eye on all of these developments. But with that, it's time for a short, quick commercial break. Remember, we are counting down to News9's Mega Global Summit, What India Thinks Today. Prime Minister Modi will be delivering a keynote address at the summit. The theme of this year's summit is how India is poised for the next big leap on the global stage. Stay tuned to watch. This is TV9 Network's initiative on 25th and 26th of February.
From fragile 5 to top 5, from a laggard to a leader, India under Modi has reimagined the world order. Presenting the second edition of TV9, What India Thinks Today. Summit theme, India poised for the next big leap. Listen to Prime Minister Modi unveil his vision for Viksit Bharat at News9 Global Summit, a TV9 network initiative.
That TV9 is preparing for, and hopefully you all can join us on 26th and 27th of February, 25th, 26th and 27th of February. But back home, another story that entire India is eyeing very, very closely, and that is Prime Minister Modi's inauguration of that mega first Hindu temple in Abu Dhabi, the Babs Temple. Kartik Malhotra joining us here in the studio. Kartik, hi. This is, of course, the first temple in Abu Dhabi. It is something that is going to likely deepen ties between UAE and India.
Absolutely, Shweta. And I think specifically on the temple, of course, this is among the largest temples outside of India, anywhere in the world, and the first temple of this scale to be set up in any Gulf country. And UAE, and of course, we have had close ties with UAE, in fact, with the whole region now, even Qatar, by way of the Indian Navy personnel returning back to India. And in addition to that, the long-term $78 billion liquefied natural gas project pipeline that we have signed with Qatar up until 2048. So overall, I think India's presence, India's dominance as far as trade and culture is concerned is deepening in the Middle East.
Absolutely.
The Pran Pratishtha, in fact, has taken place already, and that of course happened at 9 this morning, and that was something that everybody was glued on to, and obviously one big moment, and the temple momentum continuing not just in India but even outside of India.
Not just in India, but I think going on abroad, and that also essentially means there will be, as you rightly pointed out, greater cultural as well as industrial ties with the UAE. But also a lot of pacts were inked while Prime Minister is on his two-day visit, post which he is going to go to Qatar. We'll come to Qatar in just a bit. But let's first talk about some of those crucial cooperative agreements that India and UAE have inked in the past 1.5 days.
Right. So I think the foremost partnership, the formal partnership between India and UAE was the SEPA, the Comprehensive Economic Partnership Agreement of 2022. And post that, of course, we saw the closeness of the countries emerge even during G20 in 2023. I think the most monumental agreement, so to speak, was the joint development of the IMEC, the India, Middle East, Europe Economic Corridor. IMEC, IMEEC, IMEEC as it is referred to, by multiple people. But I think this trade corridor as a great alternative to the Red Sea, as a great alternative to the Suez Canal, and as a countermeasure to China's BRI, the Belt and Road Initiative, is something which I think grabbed all the headlines in the immediate aftermath of G20. And I think things became that much more clearer to the world, especially to India and West Asian countries, the Gulf region, that the Israel-Hamas conflict and the follow-on action in the Red Sea, the impact of that on global shipping, on global logistics, on supply chains could have been minimized, and in future could also get minimized if there is an alternative trade corridor available for trade between West, which is US and Europe, Europe to US in that case, India and Europe connected via the Middle East, and India and the Middle East or the West Asia, depending on which side of the map you're looking at it from. I think this comprehensive trade corridor is something which is going to change the landscape of logistics for the world. And that becomes a reaffirmation this time when Prime Minister Modi met President of UAE, Mohammed bin Zayed Al Nahyan. And in fact, there were one-on-one trade talks as well as delegate level talks to further strengthen and add momentum to the IMEC. So IMEC is back
perhaps a
on
new
the map.
bedrock of renewed
Absolutely.
and deepening relationships.
And
between
overall,
India
I
and
think
UAE.
between India and UAE, there are many other avenues of partnership as well. The fact being that UAE already contributes about $3.5 billion worth of investments, FDI, into India. Overall, if you look at the Gulf countries, the total contribution of the West Asian FDI into India, or remittances rather into India, not directly FDI, by way of people from India who also work in the Western Asia region, is about 28% or so. So almost a quarter, more than a quarter of India's total remittances which flow back into India, come from this region. And this region, of course, are close ties, like we've mentioned, with UAE and Qatar at one end, but also Saudi Arabia. So Saudi Arabia has also emerged as a great partner for India when it comes to trade ties. And I think the closeness between Prime Minister Modi and the Crown Prince of Saudi Arabia, MBS as he's referred to, has also dominated headlines pre-G20, post-G20, and even today.
And following which Prime Minister is now heading to
Qatar.
Doha, which is the capital of Qatar, where, of course, with Qatar, there's been a lot of news flow in the past couple of days of a renewed liquefied natural gas pipeline, as well as those Navy personnel who have now been let go of. They have been, they've come back to India for that matter. 7 of them have come back to India out of the 8 personnel who were on a death row. Qatar is also emerging as a strong partner with India.
So what's really happening is, Shweta, at one end, of course, this has been a great diplomatic victory for India. And the fact that you were able to extract people of your origin, people who had served in your armed forces, repatriate them back to the country, get them removed from the death row and bring them back into the country safely is obviously a great diplomatic victory. But this diplomatic victory perhaps at some level also comes on the back of economic ties strengthening between the two regions. So between Qatar and India, the LNG gas import pipeline that we're talking about is a large deal. It's a $78 billion commitment that India is making to Qatar over the next 25, 26 odd years. So this $78 billion will be traded, and in fact this is going to be something that India is going to continue to pay Qatar for its gas imports up until 2048. So obviously there is a diplomatic victory, there is an economic partnership which is going on between the two countries, and Qatar on its own account is also pretty much trying to reinvent itself. We saw the FIFA World Cup. Right, this is not something that, it's not a tournament that has traditionally been held in that region. So we've seen Qatar also trying to emerge, trying to modernize itself, shed its past glory of being a princely state, oil-rich state. It continues to be that, but in addition to that, it is trying to give itself an economic and tourism and sports makeover. So overall, I think there is this very, very strong sense of this rise of the global south, which India is dominating the conversations on right now. But the entire region is emerging from its backward prowess, not prowess, but the sort of, impression that the world had on this region was that you're oil rich, you're endowed with natural resources, and hence you have the hegemony when it comes to global trade. I think a lot of that with the overall energy transition happening across the world.
So more bilateral engagement,
more bilateral engagement,
more
and more
globalization
reinvention, and more reinvention
and
of the core
their
sectors. And that is something that the UAE has also done beautifully. So if you look at not just Dubai, which of course has been a tourism and now even a business capital, so to speak, of the region, in addition to that, you've also got Abu Dhabi. So the temple coming up in Abu Dhabi is just one more avenue to attract Hindu tourists into a largely Muslim-dominated
more tourism
region.
In Abu Dhabi emerging from here on. So West Asia, in a sense, trying to reinvent itself, not just as a territory which is known for conflict, but also a territory which is known for its business opportunities.
And that business opportunities beyond oil, beyond the natural resources which they already have.
Absolutely. And as a part of that reinvention, Prime Minister Modi is, of course, in UAE today. He will be heading to Qatar. hereafter. But back home in India, good news coming in for a lot of consumers of electric vehicles or prospective consumers and buyers of electric vehicles. Electric vehicles, especially coming out from Tata and MG stable, will now be at par with petrol and diesel. What exactly changed, Kartik?
What changed really, Shweta, was globally there has been a softening of import prices when it comes to the cell chemistry which goes into producing of the lithium ion batteries. There has been a softening of prices globally, and in addition to that, supply chains which were disrupted first owing to COVID and the lockdowns across the world and China's own zero COVID policy, followed by almost an immediate aftermath came by way of the Russia-Ukraine conflict. So supply chains across the world which were disrupted are now seeing some sort of semblance of normalcy, if you can call it that, just as yet, and that is bringing the prices of cell chemistry down. So that cost is a major saving on account of the input cost that goes into production of electric vehicles. Now with electric vehicles, the important ingredient, almost 50% of the cost, which is the lithium ion batteries, becoming cheaper by way of input cost reduction. Companies are deciding to pass that cost on directly to consumers. So instead of profiteering with very extremely high margins, and instead of profiteering, from the fact that that it is now going to be continuing to make, in addition to high revenue, high profits, it is now reaching a stage where companies are deciding to pass on that cost to customers. Now, look at the overall category, and we keep talking about SUVs and we keep talking about small cars not keeping pace with SUVs. Now that the sub 10 lakh rupee car category is coming down in sales, we are also seeing there has been an addition of as many as 3 electric vehicles which are in the sub 10 lakh rupee category. So you have the data there on your screen. You've got the Tata Punch EV, which has actually been launched at just about 11 lakh rupees. So these are not the kind of price points that we had seen for electric vehicles. The first electric vehicle to launch at a 12 lakh rupee price point was the Tata Nexon, and the Nexon obviously then saw increases in prices. But now that we are seeing with this input cost reduction being passed on to customers, there has been a reduction in the cost of the Tata Nexon. There has been a reduction in the cost of the MG Comet. So the MG Comet now sits beautifully at a 7 lakh rupee range. Obviously, it's a small car. Many would compare it to the Tata Nano, or Europe's famous smart car. Some would also call it a very, very modern auto rickshaw. But that's not me. That is what people on the street are saying. But broadly speaking, there are 3 options now available for customers who want to buy for the sub 10 lakh rupee category, and they have 3 EV options. Leading the race there, of course, is MG Comet and Tata Tiago. But even MG's other bigger cars have seen a massive reduction in prices. MG Gloucester, for example, which is a premium SUV by the MG Motors stable, has seen a cost reduction of as much as 4 lakh rupees. So overall, I think for the EV industry, I would not dare to venture into the territory of saying that it is now coming closer to petrol or diesel prices. I think the delta is still fairly large, but there is definitely a reduction in prices, which will make the ownership
cost... a substantial reduction, come to think of it.
I mean, some may call a 70,000
to
rupee,
about 2 lakh, 3 lakh rupees.
Yeah, up to 4 lakh rupees. But obviously it's based on the premiumness
size of the car and
the size of the car, right?
The car is,
but broadly, I think the cost of ownership coming down is one part. The other part is that even with just about 2% penetration of electric vehicles in India, I think consumers will start to see that it's not just the one-time upfront cost which becomes lesser, but you will also have a lower running cost per kilometer going forward. And India being a country of kitna deti hai, the mileage obsession that Indians have, I think at some point we will see a very, very natural shift to either electric vehicles or hybrid vehicles. But I think what could spoil the party in the same breath is that the FAME 2 subsidy ends on the 31st of March. And we are sitting today on the 14th of February. There is pretty much no formal word from the government of FAME 3. So is FAME 3 going to come? Is FAME 3 going to be applicable on electric four-wheelers as well? Will that cost subsidy be passed on to users? All that is still in the matter of policy disclosure, policy making, as the case may be. And FAME 2 definitely coming to an end on the 31st of March would mean that whatever SOPs, whatever benefits the electric mobility community is enjoying right now could gradually perhaps be phased out.
Absolutely. But all in all, the decision from Tata and MG to reduce prices is going to augur well for consumers out there who are hoping to hop on to an electric vehicle, perhaps own one very soon. We don't know whether other players in the market will follow suit, but good news as far as prices of EVs is concerned. We'll come back with more news and updates on the other side. Keep watching News9.
It's probably the best kept secret in India.
Family-owned business, which has been extremely clinical in their approach. They have not hesitated ever to kill their darlings.
Typical to a South Indian business empire, I think they've shunned the limelight almost deliberately.
Currently, the industry is facing a lot of challenges as far as demand is concerned. Basically, the US markets has slowed down because of high inflation.
So obviously, diamonds being a dream product, something which doesn't have a utility value or is seen as a luxury. So that obviously goes off your shopping list. That's the first item that will go off your shopping list, especially in recessionary trends.
That lab-grown diamonds are not mined, and they do away with the entire mining. So they save up on all the environmental damage that is associated with mining, and of course, the mining cost, which is why they're even more affordable.
People that is impacted by all these recessions are the artisans, are the people who work in this industry, right? But I think lab-grown diamond has allowed them to actually use their skills in the same product.
This and more streaming on world's first news OTT, News9 Plus. Download now.
How do you fulfill that promise? Because ultimately expectations have to be met. If you look at the political landscape, is it really changing for women? And what is the inability of the forces that dead bodies surface but not the living people?
We are trying a lot of experiments, innovations and ideas.
We came out with a new format in audio, which is audio series.
Listening for content-oriented company in India, which is a very unique proposition.
When we look at audio in general, we had music, which is like extremely old format, and then we had podcasts.
A natural extension to Pocket FM is to move from Hindi to regional content. I think I'd love to see their FY24 numbers, which they claim will be close to 1,000 crores. I think there are talks of them to raise another $80 to $100 million of funding.
This and more. Streaming on News9 Plus. News is now content. Subscribe and get free vouchers.
Welcome back. There is no sign of relief for Paytm and Vijay Shekhar Sharma just as yet. Days after that very crucial damning RBI order on 31st of January, we are now given to understand ED, the Enforcement Directorate, has knocked on the doors of Paytm, and this, of course, with respect to the allegations that RBI is making, Kartik, some very serious allegations, of course, of what could have happened when it comes to compliance issues at Paytm, but RBI hinting at the fact that there is more to it than meet the eye, and now ED knocking on Paytm's doors.
I mean, what we know right now only through reports, and these are source-based reports which have been printed in some daily
either
publications.
From Paytm or from
ED.
so
something papers, in fact, including the Mint on its front page today, carried this story about the ED, in fact, already having initiated preliminary investigations into the Paytm Payments Bank matter. Now, what does that matter specifically pertain to my mind, is still largely in the realm of either some news items which get derived from sources, or perhaps some connecting of the dots. But ED comes in.
Is the news laundering, money laundering
yeah,
allegation.
so ED comes in when you're really talking about money laundering or when you're talking about FEMA, foreign exchange violations. So yeah, I mean, you know, if reports are to be believed, though, the RBI thus far has not categorically mentioned money laundering even once. Neither did it mention that in its order, which was released on the 31st of January. All it mentioned was persistent non-compliance as the issue. Now, non-compliance, to my mind, is very different from money laundering. Even in the press conference immediately after the Monetary Policy Committee meet, the RBI governor and the deputy governors did not mention money laundering even once. However, the RBI can take help from investigative agencies like the ED, including the ED, as the case may be, depending on what they have told each other, what is the information sharing that has happened between the two agencies, which is the RBI and the Enforcement Directorate. Now, money laundering as a broad subject is not something that the RBI directly looks into. At the same time, at a group level, parent level, 197 communication is not really regulated by the RBI. It is a listed entity, it is regulated by SEBI. RBI only regulates the Paytm Payments Bank business, and the order was very specific to Paytm Payments Bank. So now, just trying to connect the two dots, was non-compliance one of the root causes which may have led to or have the potential to lead to money laundering? Could be one of the dots being connected, or two of the dots being connected, when you take this news of ED investigations into Paytm Payments Bank. But beyond that, I think it is difficult at this moment to very objectively comment on whether there would have been instances of either foreign exchange violation or money laundering. However, in the same light...
But a lot of speculation obviously on what RBI meant when it said persistent non-compliance. And one of the allegations, of course, was perhaps there were dormant accounts and there were accounts linked to multiple accounts. And people who were not expected to be in the banking system, or people of interest, or people with political interest, were a part of Paytm, were using Paytm as a medium. But all of that was speculation. Could that have instigated or propelled ED to perhaps start an investigation on its own?
No, I don't think unilaterally ED is going to start an investigation. There has to be some message from the RBI. There has to be some sort of, a formal communication from the RBI. Interagency communication, getting the ED kick-started on this investigation. But RBI's concern with persistent non-compliance, and this is something RBI has stated time and again, has been in the interest of users of Paytm Payments Bank or customers of Paytm Payments Bank.
Not so much corporate governance
issues. And it doesn't seem to be corporate governance. Yes, corporate governance again on the back of non-compliance of statutory, regulatory, laid down rules of operations. But beyond that, money laundering is not something which the RBI is directly required to look into. But as part of RBI's own initiated audits, if there have been red flags, then those red flags and that information would have been shared with ED, and hence ED would perhaps get enrolled into the investigation. The statement again quoted in the Mint today by by the reporter who's filed the story in the Mint quotes Paytm official spokespersons, suggesting that Paytm is going to comply with an investigation of any manner, including the Enforcement Directorate. So that quote specifically does not either confirm or deny an ED knock on Paytm's doors.
All right, but as far as that crucial February 29th order is concerned, we now know for a fact that RBI is not going to relent anytime soon. RBI governor again and again coming on record to suggest there is not going to be any review or a look back on that.
But I think that FAQ,
order,
which is likely to be released this week, is still awaited. So hopefully, once that comes in, we may have more clarity. What has also happened, interestingly, Shweta, in the same sort of mess that Paytm finds itself in right now, is that on 1st of February, there was this conference call between the management of Paytm and its investors, wherein it was suggested that by 14th of February, which is today, there is going to be a reinitiation of the loans, the lending business of Paytm Payments Bank. Not the Payments Bank exactly, but the lending business of the fintech company Paytm was supposed to restart from the 14th of February. There hasn't been any news on whether that lending business is going to restart. Now, reports are also suggesting that there is no direct linkage between Paytm Payments Bank and its lending arm. However, there are merchants who have taken loan from Paytm which have an auto pay facility linked to their Paytm Payments Bank. So, you know, those auto debit or auto pay EMIs could get hampered post the 29th of February. If there is no money coming into that account, how do merchants continue paying back their EMIs through that account? So at some level there is going to be a rewiring of accounts, and the nodal accounts will have to change.
The loan account and
absolutely, because the exposure as of December quarter, in fact within the December quarter, the kind of exposure Paytm had in its lending business was upwards of 15,000 crore rupees, and there are as many as 1.25 crore unique users who have taken loans of some form from Paytm.
And Paytm stock today is down at record low, 9.5%. It's been taking a beating for a while now, well below the 300 rupee a stock mark. But Paytm obviously continue to battle a barrage of allegations and a series of perhaps fresh news items that are coming in, trickling in, not very favorable for Paytm at the moment. We'll keep bringing all those details to you, but before we close this bulletin, it's the day 2 of the farmers' protest here in the national capital and around national capital in Punjab, Haryana. Just yesterday, we saw violence unfold in many bordering states where farmers who were trying to get into and cross the border into the national capital were dissuaded from doing so. You know, in a consistent sort of battle that is spanning out between the central government and the farmers, it looks like farmers are not giving up. They are still at the borders. They're hoping to come to Delhi once again. It's a repeat of what we saw in 2000 and 2021. The demands this time around, as we discussed yesterday extensively, are a little too much, as many would say, Kartik.
Absolutely, Shweta. I think, you know, the question right now is who's going to blink first. Is it going to be the farmers or is it going to be the central government?
Doesn't look like central government.
It doesn't look like the central government for sure, because I think the central government will be able to ill afford any of these demands which are now being raised by the farmers. And the farmers also at some point need to understand and need to be aware of the macroeconomic picture of the country, wherein it is going to be difficult for any economy to comply with their demands. Now, quickly, let's just run through what are their demands. They are looking at the implementation of the MS Swaminathan formula, which is C2 plus 50% as MSP, not just on the existing 3 crops, and a legal guarantee of that, not just on the 3 crops where there is some form of MSP right now, not the MS Swaminathan formula, but the A2 plus FL formula, which the farmers feel is depriving them of higher wages for their crop production. But in addition to that, there is, of course, you know, this whole formula right now, the MS Swaminathan formula, which is going to give a higher income to farmers. Now, the farmers at some level need to understand that that is not something that the government of India can afford, and they need to figure out a way to agree with the government on what is the best that the government can do. And I think what the best the government can do is something that the government is doing already by way of subsidies. So it cannot be, you know, the best of both worlds. You can't have the cake and eat it too. So it has to be a case where either the subsidies, which are to the tune of 10 lakh crore rupees for fertilizer subsidy, 2.5 lakh crore rupees for PM Kisan Yojana, and a plethora of other subsidies like free electricity, free water, no tax on farm income, all of these can be kicked out, and then we can perhaps look at a formula which offers higher MSP. But then this higher MSP is also something that the farmers are demanding on 23 crops. I mean, you know, you have it on the
actually on 200 crops. They're demanding it on 200 crops,
so officially
which
the
is
farmers
all
are saying,
the more.
Officially, the farmers are saying 23.
They already have MSP.
But supporters of farmers are saying that it should be extended beyond the 23 to 200.
So, as per the latest notification this year, government already supports and gives MSP on almost 23 crops. It does not procure everything that is produced by the farmers on all 23. Most of the production that is procured is basically on the 3 important crop that includes your wheat and rice, consumption for which is higher than the other crops. But at this point, a legal guarantee essentially means that everything that is produced by all the farmers has to be procured by government at all time.
At 50% higher than the cost of production. Which industry works at 50% margin?
And add to that, the fact that there will be a buffer stock which cannot be consumed within the country, will be rotting in FCI, that cannot be afforded by the country.
Now, in addition to all this, Shweta, you've put it very well. In addition to all this, the farmers are saying that exit WTO. They don't like WTO. At the same time, in the same breath, they're seeing increase import duty on foreign imports that go into farm produce. So, I mean, these double standards also need to go. It's
at this
irrational.
point to ask for a pension, to ask for
Debt
all
waivers.
the debt that farmers have to be waived off, and to add to that, also ask for subsidy in continuation with a legal guarantee
And
on
asking the
MSP.
government to repeal all the cases against farmers who protested in 2020, 2021, and those cases to be taken down completely. So I think overall, it's not a great situation, and we have subsidized the farm sector enough. I think at some point the farm sector needs to be far more competitive, and there has to be a greater understanding of what is it that the government can afford. Because if the government has to afford it, who's going to pay for it? It is going to be taxpayers like you and me. It is not going to, the money is not going to get printed. It's not, we are not going to go into, scenarios where we are printing new currency just to take care of what the farmers should get. Eventually, it is going to be the taxpayers' money, which will have to, and given our own fiscal deficit targets, which are still, despite, the numbers being hopefully reduced to 5.1% and then to 4.5% in subsequent years, we are still looking at a distance far away from the target of 3% of fiscal deficit. So if the government continues to increase its expenditure and continues to stay far from the 3% fiscal deficit target, where is that money going to come from? That money will come from taxpayers. So I think all sympathizers right now with the farmers saying that, our Kisan is our bread and butter and that is where our food comes from, need to actually take a reality check and see that eventually if the government has to blink and the government has to give in, that money is not going to come for free. That money is going to come from taxpayers like you and me.
Absolutely. And here's my, two bits on how the farmers' protest is panning out. It does appear that farmers who have come back on streets, and they have the right to do so. It's a fundamental right to protest, even though it hurts the economy, it hurts the traffic flows, it hurts all the institutions, including education, to people who are expected to reach to their offices on time. And you can see visuals on your screens of massive traffic jams that a lot of people are faced with as a result of farmers' protest. That withstanding, farmers are demanding a debt waiver. They're demanding higher legal guarantee on MSP on the basis of the Swaminathan's formula, which will mean central government will have to spend more. Remember, farmers already do enjoy subsidy in fertilizers to water irrigation and are subsidized to the tune of about 70 to 80% of their total produce at this time. What looks good versus what is actually good for the economy, I think that would be the larger debate when it comes to farmers' protest. We'll continue bringing all those updates here on News9. Thank you for watching.
We are trying a lot of experiments, innovations and ideas.
We came out with a new format in audio, which is audio series.
Listing for content-oriented company in India, which is a very unique proposition.
When we look at audio in general, we had music, which is like extremely old format, and then we had podcasts.
A natural extension for Pocket FM is to move from Hindi to regional content. I think I'd love to see their FY24 numbers, which they claim will be close to 1,000 crores. I think there are talks of them to raise another $80 to $100 million of funding.
दिल्ली, आहूजा फैशन, रात का वक्त। आहूजा फैशन के एक रूम में एक लड़की इति अग्रवाल, वो लाल रंग के शादी के लहंगे में बैठी हुई थी। वो घुटनों में मुंह देकर सिसक कर रो रही थी।
We are trying to achieve binge listening, which means, we are giving people such entertaining stories in such entertaining formats, and there is something for everyone here. So, you name it and we have it, kind of a thing. We have been able to break this habit also, where people were not consuming audio stories as much as they are today. So we make sure that whatever we are creating it for our users. So when they love it, they will consume it.
यार लकी हमारे साथ कॉलेज में पढ़ता है और 20 रुपए के समोसे खाने के लिए उधार मांग रहा है। चल आज तेरे दिन को लकी बना देती हूँ, चल मेरे साथ।
लकी की गरीबी की वजह से कॉलेज में हर कोई उसका मजाक उड़ाता था।
Audio in general, we had music, which is like extremely old format, and then we had podcasts and audiobooks. And if you talk about audio entertainment as a core format, like it was nowhere there, right? I mean, if I wanted to consume something like a web series in audio format, it didn't exist, right? So given this huge white space which existed in audio format in general, we thought that it's a huge opportunity for us.
I was always updated like what is going on, and then in 2021 I decided it's time, like these guys are building actually something really big.
I, Nishant and Rohan then started working on this idea of audio entertainment. We did a lot of iteration, and we came out with a new format in audio, which is audio series.
I came with a very open mind to figure out to help the business in whatever capacity I can.
No, I think it's good. It's an interesting company. I think I'd love to see their FY24 numbers, which they claim will be close to 1,000 crores. I think there are talks of them to raise another $80 to $100 million of funding. That will be an interesting milestone for them. I think they are already in talks with several of their investors. I think Lightspeed has already committed to leading the round.
The consumption sort of like format and the way our users consume the content, it's quite different. Given it's a long form serialized fiction content, right? So